What's the major theme that you see in the energy complex at this stage?
I think the major thing that still stands out is the sluggishness in the demand recovery. I think that's really where the disappointment this year has come in. Of course, during the heart of the coronavirus crisis in March and April, oil demand fell tremendously. And in response to that, OPEC put in place a lot of production cuts. US shale also saw a meaningful decline in production. And with those supply adjustments, we had hoped that in the second half of this year, demand would come back, the market would rebalance, and we would find a higher level. But inventories are just simply stubbornly high. They're about 600-700 million barrels above what they were this time last year. And they're not really drawing all that much. And that is not because of the supply curtailments. They're there. It's because the demand recovery is simply more slow than we thought. You can also see this in other data points. Refining margins are historically low. That's consistent with low demand. Airline aviation statistics have largely stopped improving at the start of August. So it's just that the demand recovery is really quite slow. And that's why these stimulus measures are so important, and the oil price is so sensitive to announcements on that.
Martijn, so let's get into some of the volatility we may witness around the complex because of the election. We've been on a bit of a roller coaster around President Trump's health, a bit of a sell-off in some of the risk assets initially, and then a bounce back. The fiscal stimulus that was disappointing, as you mentioned. But there's been a growing consensus now in a number of the investment banks that, in fact, Biden, and if there's a blue wave sweep, it may not be negative for risk assets because of the amount of stimulus that they're adding up across the economy. What do you make of that? What's the potential for the oil market to respond to a Biden win on the 3rd of November?
Yeah, it's a relatively complex picture. I mean, the argument that you put forward about sort of stimulus is very favorable for all of commodities. It really casts a very positive light across the entire commodity complex. These stimulus measures often lead to weaker dollar. They often lead to higher inflation expectations, and commodities respond very well to that, and the oil market participates in that. But the other oil market specific element of a potential blue sweep would be a re-engagement of the United States in the nuclear deal with Iran. And Iran is still withholding something like 2 million barrels a day of oil exports, which it is doing so because of sanctions, of course. And there is some expectation that in the case of a Biden victory, perhaps the US could reconsider its stance with regards to JCPOA. And if that is the case, then you could also see a supply response and more oil could come to the market. And that kind of sort of offsets that. So I think that is clearly where the tension lies. I would say in the oil market, if you ask most oil traders, we would sort of say that a decisive blue sweep would probably initially be more net bearish for oil prices rather than net bullish.